Welcome. Today we're diving into Ipsas 19, International Public Sector Accounting Standard 19. It's the rulebook for how governments handle financial uncertainties, provisions, contingent liabilities, and contingent assets. Why care? Because it ensures governments are transparent about what they owe, or might owe, with your money. Ipsas 19 stops public entities from hiding potential problems, making financial statements more honest and reliable. By the end, you'll see Ipsas 19 isn't scary. It's a practical guide for public finance transparency. Let's start with provisions, a liability where the timing or amount is uncertain, but the obligation is real. Ipsas 19 says you record a provision if three things are true: media group, financial advisor pointing at checklist on clipboard, auditor explaining points in meeting room at stock, distribute _equally. There's a present obligation from a past event. It's probable you'll have to pay, and you can reliably estimate the amount. A legal obligation comes from law or contract. A constructive one comes from past actions and public expectations. Probable means more likely than not, over 50%. If you can't estimate the amount, you don't record a provision. It's about using the best available info to make a reasonable estimate. Provisions ensure financial statements reflect real, if uncertain, obligations. Let's see this in action. Imagine a government agency must clean up environmental damage after a new law. The contamination is the past event. The law creates the obligation. Engineers estimate cleanup at $500,000, so all three criteria are met. The agency records a provision: debit environmental cleanup expense $500,000, credit provision for environmental cleanup $500,000. This shows the expense now, not when cash is paid. The provision appears as a liability, making the financial impact clear. It's transparent, timely accounting for future costs. Provisions aren't set in stone. They're reviewed and updated as new info emerges. If cleanup costs rise to $650,000, the agency debits expense and credits the provision for the extra $150,000. This keeps statements accurate and up to date. When the cleanup is finished and paid, the agency debits the provision and credits cash for $650,000. The liability is removed, reflecting the obligation's settlement. Provisions are dynamic, adapting to reality. This cycle, estimate, adjust, settle, ensures financial statements stay relevant. Ipsas 19 demands ongoing accuracy, not one-time guesses. Now, contingent liabilities, possible obligations that depend on uncertain future events. If it's not probable or can't be reliably measured, you don't record it as a liability. Instead, you disclose it in the notes for transparency. Example: a lawsuit with only a 20% chance of loss isn't a provision, but it's disclosed as a contingent liability. The note explains the nature, amount, and uncertainties. This keeps readers informed about potential risks without overstating liabilities. Ipsas 19 draws a clear line: only probable, measurable obligations hit the balance sheet. Contingent assets are possible gains from past events, but you can't recognize them until the inflow is virtually certain. If it's just probable, you disclose it in the notes, never as income. This prevents over-optimism and misleading results. Example: if a government sues for damages and it's likely but not certain, they'll win. It's a contingent asset disclosed in the notes. Only when the win is almost guaranteed does it become an asset. Ipsas 19 keeps financial reporting prudent and realistic. Let's recap. Provisions are probable, measurable obligations. Record them as liabilities and expenses. Contingent liabilities are possible or unmeasurable obligations. Disclose them in the notes. Contingent assets are possible gains. Disclose only if probable. Recognize only if virtually certain. Ipsas 19's framework ensures transparency, prudence, and reliability in public sector accounting. It forces governments to face likely costs, be open about risks, and stay conservative about gains. These rules build public trust and financial stability. Recognize what's probable, disclose what's possible, and never count your chickens too soon. Thanks for joining this crash course on Ipsas 19.